In Money Watch, the U.S. and its allies are announcing an additional series of sanctions against the Russian financial system.
That's right. Additionally, the Treasury Department is prohibiting any transaction in U.S. dollars with the Russian central bank, effectively freezing its assets.
The action comes as Russian citizens flock to banks and ATMs in hopes of withdrawing funds before the nation suffers widespread cash shortages.
The Russian ruble tanked on Monday, falling to record lows. The currency's value dropped nearly 30% as the West increased sanctions against central bank and Kremlin leadership. Joining us now for more on this is Georgi Kantchev. He is a business reporter for the Wall Street Journal. He is in Berlin. Georgi, thank you so much for joining us. So this is all happening very quickly. The ruble's value is tanking as we speak. The Russian central bank is boosting its key interest rate to 20%. Is all of this a sign that the U.S. and its allies' sanctions are actually working? And how is this interest rate hike protecting the ruble from further collapse?
Well, first of all, it's really difficult to overstate what we've seen today on the markets, the impact of these sanctions on the ruble, for example, as you said, nearly 30% fall. These are huge, huge moves for currency. And then, of course, we've seen the central bank react very quickly with this doubling of the benchmark interest rate. This is a huge move by a historic standard because usually central banks are very cautious institutions that take a long time to have these moves, but seeing 10% move and more in a day. So we see these historic moves in markets, and they really are showing that the economic hit on Russia from these sanctions is just beginning now. We've seen, on top of that, we've seen Western companies leaving the country, divesting from Russia. And of course, as you said as well, we've seen the ATMs, the lines of people from Moscow to Vladivostok, everywhere, people being, at these ATMs scrambling to try to find cash. So I think we're seeing that these Western sanctions, at least their punitive impact and aspect, it's already working. For sure.
Georgi, I would ask you about the Russian stock market today, but it never opened. How unusual is that?
I mean, that's another big issue, of course. We've seen in other markets, we've seen on the London Stock Exchange, because a lot of Russian companies are listed there, we've seen that major Russian banks and energy companies have fallen by 30, 40, 50, 60%. So that's why, obviously, in Russia, we've seen the impacts on all kinds of assets. The ruble, companies, bonds, it's really across the board.
And, Georgi, the U.S. and its European allies, as you know, cut most of Russia's banks out of SWIFT over the weekend. This is something that they had been debating for a while. They finally did it. What do these actions mean for the Russian economy?
That's an important move, of course, because SWIFT, you got to think of it as, as a financial messaging system. And that really links the world's banks. I mean, SWIFT doesn't really handle transactions, but it's a messaging system. So banks need to use that system to securely communicate. So cutting a country, or at least a few banks, major banks, from that system, it means that everything from, trade, foreign investment, remittances, all kinds of cross-border payments and financing, all of that is just really made very, very difficult. There's some cases where the Russian banks that have been cut off from that system will need to use fax to communicate with other banks across the world. And of course, on top of that, we have the action against the central bank as well. So this has been really a big deal for the Russian economy. The one thing we have to say here, that there has been a compromise designed to kind of keep an open channel, if you will, for the energy payments, because it's very important for the Russian gas and oil to get to Europe. So that's still possible. But for a lot of the rest of the banks, it's really tough days ahead.
Is there any room for even further sanctions at this point, or is Russia like Iran right now?
Not yet. Again, there's been obviously the exception made for energy exports. That's the oil and gas is still flowing, and that's very important for Europe because Europe is so dependent on Russian energy. So we haven't seen that step yet. There's been still some banks that are open, and I think it's important here to differentiate what the Western sanctions are trying to do is, of course, punish the Russian state. But it's very important to know that they're trying to to punish the government, the state, not the people.
Right.
If they were to blacklist, if they were to sanction all of the major banks completely and cut them off completely from the global system, that will have an even bigger impact that we already have are about to see on the regular Russians. And that's a big problem that the West is trying to avoid.
It's a tricky balancing act here, right? Punishing the government while, not trying to punish the people. Very, very tricky. All right. Georgi Kantchev, thank you so much for joining us, business reporter for the Wall Street Journal. We appreciate it.